Tax accounting under US GAAP is increasingly important for Irish-based multinational businesses. Whether it is a US stock listing, aspiring towards US capital markets, Pillar 2 calculations, or working with the US headquarters, it's more and more important for tax teams and finance teams based in Ireland to be well versed in US GAAP tax matters. I'm delighted to be joined today by Ashby Corum, partner in charge of accounting for income taxes with KPMG US, to discuss some of the current hot topics in this area. Ashby, you're very welcome.
Sean, thank you for having me here.
Excellent. So at this time of year, we are in January 2025 recording. Tax and finance teams are very focused on their year-end tax provision and their tax disclosures. Tell me, what are some of the current topics and trends that regulators are looking at when they're reviewing those?
Okay. One of the most important things that's always been on the SEC's mind is making sure investors have the right information to make their own assumptions about the future for the company. So you'll see a lot of comment letters asking for information to better understand items in the rate reconciliation, what's recurring, what's non-recurring, so that an investor can make an informed decision about the future.
Understood. So rate reconciliation, very important.
Yeah.
Things that are looking towards the future. Anything else that we're hearing from regulators at the moment?
Along that same thing, at a recent conference, the SEC made some comments about making sure investors also understand what Pillar 2 taxes will mean for the company in the future. Following that same theme of can they make informed assumptions about the future, and will companies be paying materially more tax or not as a result of some of the Pillar 2 laws out there now.
Interesting, and clearly a very hot topic in the tax world, and clearly the SEC are alive to that also. There's also some new changes coming down the track in the form of a new accounting standard, which will also see more disclosures required. Maybe just give us the headlines on that and when it becomes effective.
Okay. There's a new accounting standards update out there that provides really requires a company provide a lot more information around income taxes paid and a lot more detail in the rate reconciliation. This will get into a lot of country-by-country data and really a lot of by-country visibility that hasn't existed in the past. Now, companies aren't required to adopt this new standard until 2025 for calendar year companies, but they can early adopt it if they'd like.
And I suspect this is a lot more disclosure on a country-by-country basis, and for significant tax matters, there's a lot of work in pulling that together. While this is somewhat similar to EU public country-by-country reporting, how do you think tax teams are prepared for this?
Well, I think companies need to be diving in and understanding where they stand, where they have data gaps, where there may be information out there where they'd like to be able to control the narrative around it. Because the disclosures will have a lot more detail on a country-by-country basis on where their reconciling items are coming from, and a lot more disaggregation and of things that might be netted today. And so I think it's very important that companies start modeling that now, using 2024 and 2023 data to see what it looks like, where do they have data gaps, and just really what it looks like and how long will their rate reconciliation be. It may be one of the bigger tables in their footnotes.
Okay, yeah, which is something that people want to get ahead of. An important tactic for all tax and finance teams is, no surprises, right? So taking the time now to understand what is it going to look like on a prospective basis, but maybe using the data that is available. It's probably something to go on the to-do list for after teams are through their 2024 year-end process. There's probably a few other things that could be added to that list. With the change in administration in the US and the Republicans having control of both houses of Congress and the presidency, we think it's probably likely that we might have some US tax changes during 2025. Another item for tax teams to be looking at. Maybe just remind us some of the considerations from an accounting perspective where there are changes in tax law.
Okay. No, you're exactly right. There's a strong presumption we'll get some kind of tax bill at some point during the year. And so companies need to closely monitor that, understand what it means for them. Because whenever the date of enactment happens, when we get the president's signature on that legislation, they'll need to be prepared to account for it in that period. And so to understand exactly what it means. If there's a change in the headline statutory rate, it could be remeasuring deferred taxes, but there could be other items in there. There's a lot of certain provisions now in the law that have expired that may or may not get extended, and understanding what's in there. And if history's any indicator, there'll probably be a few surprises. So we'll have to understand how to account for those once we understand exactly what those are.
Absolutely. There's always a journey along the way.
Yeah.
There's a final result, but along the way there can be lots of iterations and possibilities. And I think many of us will recall the last time there was significant tax changes in the US, and the process to get there meant that tax teams and finance teams needed to be able to quickly understand what a particular measure may or may not mean, both on a once-off basis but on an ongoing basis for cash taxes, but also for effective tax rate and disclosures. Being ready to model out or calculate in a dynamic manner those calculations is really important. And back to your point earlier around making sure we have no surprises and making sure the communication strategy is understood both internally and externally, I think is really important and something for tax teams to try and get ahead of. Appreciate we've covered a lot there. If you would like to discuss further any of the tax matters raised today, please do get in touch with us or indeed with your existing KPMG team. Thank you.